Welcome to MEED Live. My name is Richard Thompson. I am the Editorial Director of MEED, and I'm delighted to be joined today by Chiradeep Deb, the Managing Director and Head of Corporate Finance from Mashreq. Welcome, Chiradeep.
Thank you, Richard. It's a pleasure.
So we're going to be talking today about corporate finance, particularly providing finance to contractors in the UAE construction sector.
Sure.
Now, we have been hearing at MEED for maybe 2 years about liquidity crises, late payments causing problems for contractors, delays in projects or cancellations even of projects, creating uncertainty for contractors and a lot of problems for anyone who's operating in the construction space, particularly regarding finance. How does that look for you from a banking perspective, lending to the contractor market? What has been the impact of lower oil prices and government cutbacks?
The lower oil prices have really seen the banking sector go through a pretty significant period of challenge. We have been at it for the last 24 to 30 months. We have got to a new normal. We believe that everything needs to be cut to size with a $50 to 60 kind of barrel per barrel price.
Is it your view that the 50 to 60, the new normal that we've been talking about, that is where we are for the next 4 or 5 years at least?
I think, from conservatively speaking, that's what we should be planning ourselves for, and therefore, when you come down to the question around how have the contractors really behaved during this period, we had our period of challenges, and so effectively from a period of the past where government budgetary allocations used to really fund those infrastructure projects and the projects around the region, we have come to a point where the government has moved to the other extreme, asking for the contractors to really come up and bid along with the financing package backing them. So it's a 180-degree shift.
So a lot
right?
has changed.
So a lot has changed, of course, in this market in the last 30 months.
And is that, from a bank perspective, is it changed for the good? Does it just mean that the mathematics is more complicated, or is it actually the situation is more difficult?
I think the banks had a template that they were used to prior to 2015. And we knew exactly, as long as the contractor does this stuff right, the money will automatically flow in. It's no longer the case there. So one has to tick a few more boxes and understand a bit more into detail around the budgetary support which are financing this project, how strategic they are, whether they really will stand the test of time, and then look at the contractors in a bit more detail around the other liabilities that they carry, and whether they will be able to sustain themselves if one of their projects really don't go as per the plan.
So it's no longer just a question of contractors doing things properly. You have to carry out tighter due diligence,
absolutely.
Look into more scrutiny.
I think we are very much in that phase, and the phase is just going to get more deeper.
So that means from a balance sheet point of view, the bank has to look at the contractor balance sheet, the assets, the liabilities, the quality of the project, and from a cash flow point of view, you have to look at the quality of the paymaster.
Absolutely, you've answered it. So.
Okay,
that's exactly where we are.
And does that mean it's going to be more difficult for me as a contractor to come and access finance from Mashreq or any other bank, or does it just mean the capital is still there, but I have to get a few more?
I think it's the latter. The capital is still there. Banks have to be in business, and therefore they have to lend, and therefore they have to take risk. So that doesn't go away. We are more than happy to consider financings, as long as we understand the underlying risk that you are carrying, and we are comfortable with the way your capital structure is organized around the risk that you carry. And that's where the different forms of alternatives and challenges that come in, which we explore.